Hi dear traders, the closer is the Fed's monetary policy meeting, the more sensitive the market is to any comments from policymakers about the future of interest rates. Here is how market sentiment changed last week. The chart illustrates that traders were awaiting the Fed's next step with extreme caution, even uncertainty. It remains to be seen whether it will be a 0.25 or 0.50% rate hike. Last week, some FOMC officials delivered hawkish speeches, calling on the American Central Bank to stay aggressive to tame inflation. At the same time, there were those who urged the regulator to slow the pace of tightening and see how economic conditions would adapt to the changes. In addition, the United States saw the release of a report that logged a slowdown in annual inflation to 6.5%. In this light, American dollar index, the index tracking the value of the US dollar against the basket of 6 major currencies, hovered around 102, almost unchanged since the beginning of the week. The euro-dollar quote traded at 1.0850 near the April high. Demand for the pair has been steady amid a decrease in consumer prices in the eurozone. However, unlike in the United States, the European Central Bank will unlikely change its stance on monetary policy. The European regulator is expected to continue hiking rates at the same pace. Meanwhile, a subtle decline in UK inflation makes investors think the Bank of England will stay aggressive. Economic conditions in the United Kingdom are much worse than in other countries. Its central bank says the British economy has already entered a recession. Even assuming it will be a deep and prolonged recession, the Bank of England is likely to raise interest rates to 4% next month, following 9 consecutive rate increases. The American dollar-Japanese yen pair incurred losses last week despite a weaker US dollar. Financial markets are closely watching how the regulator's monetary policy alters after Governor Haruhiko Kuroda, whose 5-year term ends in April. Anyway, the Bank of Japan left its monetary policy unchanged at a meeting on January 18th. Although the decision came in line with market expectations, it still triggered a mass sell-off in dollar-yen pair. This way, traders expressed their discontent with the move. Gold was firm near its 9-month high last week on expectations of a less hawkish Fed. The asset has been bullish for 5 weeks straight. During the week, the pair traded at $1,935 per troy ounce. The energy market was increasingly bullish last week. Improved demand prospects instilled optimism in oil traders, although concerns over a possible shortage in hydrocarbons were still felt. Thus, the price of BRENT rose to $87 per barrel. Global oil consumption may hit a record daily average this year, with China's reopening, the International Energy Agency predicted. However, the agency also warned that a price cap on Russian oil could reduce supply even more. These are the trends of the last trading week. Stay tuned, do not miss our daily news reports to be always in touch with the latest market news. See you!